Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Cube Report, the weekly DIA, IWM, and Bitcoin report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it.
Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly DIA report. That is the Dow Jones Industrial Average ETF for the week of Monday, February 28th, 2022. I know you just saw that commercial. If you didn't fast forward through it, it basically asks you to consider becoming a premium member for wickedstocks.com. Just know that this is the last week that the weekly DIA, weekly IWM, the weekly Bitcoin report will be posted for free on YouTube. They segue into a paid format. So if you didn't listen, I'm just letting you know now that there is a package, a $25 a month package that includes the weekly DIA, IWM, Bitcoin, and all of our stock picks, typically 3 a week. One goes out on YouTube free. The other 2 are for premium members. That's been the way we've been doing it now for a year and a half. And so you'll get all of those for $25 a month, and we're offering half off your first month. There's a coupon code half off. If you watch that commercial, we're going to put it in the tail end of this video as well as a reminder, and that'll be $12.50 for your first month, and then $25 thereafter. If you wanted to add the Daily SPY to that package, it'd be $40 a month, and if you wanted everything that include also the Daily Triple Q, it would be $50 a month. So if you did the entire package and you did half off, it would take you from 50 down to 25. So I hope you come on board. I think we do a great job of illustrating these key points and defining the trend parameters and the directional dynamics, both near and long term. Let's start with this chart. These are all weekly bar charts for the DIA. We did spike through that channel bottom, obviously, in a very meaningful way, 339.28 this week. It held nicely about a month ago, about 5 weeks ago. I'm not putting too much emphasis on this level this week. I think if you're an aggressive DIA trader near term, you can trade off of this point. But I think it's lost its meaning following last week's spike. And I think really what I'm emphasizing now in terms of long-term support, and I still, this is something I've been mentioning now for months, is this former long-term channel top this week at 317.71. Now, when we spiked last week below that 339.28 formation, we didn't fall to within 1% of 317.71, but we definitely fell inside the 2% zone. I don't put any emphasis as well on 2%, but as we approach 1%, so if you wanted to take a look at the 1% zone as a buy zone for the DIA this week, it would be 3.17 above 317.71. That would be 320.88. 320.88 if I'm doing my math correctly in my head. So if we test 320.88 this week, we are entering the 1% zone. That is a buy zone. This is a long-term channel formation that sort of it was a significant buy signal long-term. This is a 13-year channel top. and we closed above it a little over a year ago. And now that we're falling back toward it, it offers a platform of support that I think you can buy into through the rest of the year. And once tested, we can push back into that consolidative range that we occupied for a better part of the year, and even push on to new highs as we continue into later this year. So 317.71, a big level. Now, given the heightened volatility and what's going on in the world, it'd be remiss for me to not emphasize or at least illustrate what if. What if we do close this week below 317.71? And once again, you want that to be a 1% violation to the downside. So it'd be 317 minus 317.71, and that would be what, 314. 54. Did I do that properly? I'm sorry. I should have had this prepared before I did the video, but it's a simple calculator. 315.54 or 314.54, isn't it? Yeah, 314.54. You may want to double check that, but if we settle this week 314.54 or lower, excuse me, in the DIA, then I think we have real trouble on our hands. I would suspect also that the SPY will have violated its long-term support, the triple Q. I invite you to watch the daily SPY and the daily triple Q to see all that. But if we do close below this 317.71 formation by a 1% margin, I do see not only 295.95, probably within a week or two of that event, closing below 317.71. But I think overall we enter sort of a bear market phase that could last well into Q2, whereby I would anticipate this 270.45 level. And I'm not kidding, actually. I think that that is actually realistic if we close below 317.71 by the 1% margin, 295.95, a quick target. We could bounce nicely off of that level, possibly for a month. But I think as time wears on, this market shows continued heaviness into later Q2. And 270.45, I think a realistic, I'm just guessing, 2 to 3 month target if we settled this week to 314.54 or lower, or in other words, 1% below that 317.71 formation. So that's all I'm going to cover really to the downside. 317.71, good bottom picking territory, not only through the month of March, but for the rest of the year itself. So let's take a look at the upside. Now I'm just showing you here again, reference, horizontal line is at 317.71 long-term channel top, and 339.28 is that former, still is a channel bottom that held nicely 5 weeks ago, but I don't think you can rely on it in a meaningful way for the week itself, perhaps, but not certainly into later March trade. In fact, for me, having come close to testing 317.71, and if we do open and hold 339.28 this week, I think we can recover up to 352.15. And this is sort of, I like this channel top. It follows the sequence, those lows, following the all-time high in December. So it is a valid channel top. It's trend defining over the near to midterm. In other words, we could top out at 352.15 through the month of March, and from there fall off again into the upper 310s, the 317.71 long-term rising channel top. We could trade inside that wedge that you see here between 317.71 and 352.15 well into Q2 through April perhaps. And then, the market will tip its hand longer term, in my opinion, if we settle outside of that area. The likelihood is, because 317.71 is a much more significant support level than 352.15 is a resistance level, it's likelier that 352.15 will give way. I don't think this week, but possibly over the next few weeks, we could close above 352.15, and then I would anticipate this structure at 367.31 within a few weeks, where we could also top out on a monthly basis. Of the two here, I really think 352.15 is the more meaningful. I think it is, if we settle above, it is the sign that we enter at the very least more of a neutral dynamic as we continue through Q2. And yeah, we'll have trouble at 367.31, but closing about 352.15. If you haven't bought it at 317.71 or those dips down into that zone, and you're just kind of waiting it out, if you're an investor, for instance, or looking for sort of a longer term trade that could last for several months, it would be the settlement above 352.15. I think then that 367.31 is poised for violation, not the following week or two, but over the following month or two. And then we continue on up, obviously, to new highs as we move into the later half of the year. I think that that pretty much covers it. Once again, please consider becoming a Wicked Stocks paid premium member. I appreciate your support. This is the last free week for the DIA. It goes to paid starting next week, along with a package of the weekly IWM, weekly Bitcoin, and all of our stock picks every week, typically 3 a week. I'll just leave it at that. I appreciate your support. Hope to see you at wickedstocks.com. There will still be relevant and meaningful, valuable information, content that I'll be posting to the Wicked Stocks YouTube station. It'll include sort of supplementary stuff like the underlying SPX, the NASDAQ 100. I'll be doing analysis on that, crude, gold, the inflationary, markets. That's all good stuff, and you can expect that still on our YouTube station. But in terms of this week by week, day by day, I ask you to subscribe to wickedstocks.com. You have a great week, and we will talk soon.